Hello, ladies and gentlemen. Welcome to the Tuesday live show. Good to have you back, fellow traders. Tuesday, the 10th of June already. Can you believe it? Don't forget, most traders lose money. If you're unsure, you probably shouldn't be trading. Let me turn that off before I forget to turn it off. Hope you guys are all well, and I hope you guys are all back as usual. I've been struggling to explain the difference between a system and a strategy. A lot of people still don't get it. A lot of people are still struggling with that. So I think we'll try and go into that in a little bit of detail, but we can talk about a whole bunch of other things that are going on in the market as well. Gosh, what's happening between old Trump and Musk? What's happening there? You guys can tell me. I don't know. That sounds a bit odd. I see the US 500 is still going up in the right direction, still staying above its trend, which is good news in itself, at least that. And that's quite a nice trade that's going there. And then, of course, Brent crude oil is also moving in the right direction for us. So that is staying up there for the time being. This morning's call, Euro, Japanese yen. Once again, it's just not working out just yet. Waiting for that red candle to close, and it's giving me a bit of a hammer formation, which is not perfect on that front. CHF, JPY, similar scenario. Gold is trying to push back up to those resistance levels. Let's see if it goes down. Let's see what happens with that one. But yeah, that's the market. Morning, Elaine. How's it going? So, yeah, I've been trying to explain to people in the videos, in most of the videos, and I've actually made a video called about the break and retest strategy in the system. How to work with break and retest. That'll come out for you guys tomorrow, I think. But what I'm trying to explain to people that there's a massive difference between system and strategy. And we all work with a system. What you see in front of you here is a system. We work with a system. And the system is what kind of helps us take our trades. It helps us manage our risk. It helps us draw a line in the sand, and it helps us feel more comfortable when we choose a buy or a sell trade, because the market only goes two ways. It goes up, it goes down. And if I told you, here's a blank chart, choose a direction, in all likelihood, it's going to be difficult for you to choose a direction, except in this case. I mean, you just probably choose buy, but okay. But if there's no indicators, there's no support and resistance, there's no price action, there's no whatever system you use, in most cases, you're going to find it difficult to make a choice as to which way you want to take a trade. And that's why I invented the strategy. That's why I understood very early on that you need to have a business plan and you need to have a strategy, because the lines don't make you money. They're just a win rate. And, when I say the market's 50-50, it's about the system. Every time you take a trade on a system, every time you take a trade on a chart, it's very much a 50-50 choice. All you've done is drawn some lines on to make you more comfortable that the high probability is in your favor, because human beings are creatures of habit. It's going to happen over and over again. So what always gets to me is when I say that, so many people get caught up in the lines. They start talking to me about the lines when I say you've got to make more in your wins and lose less in your losses and risk to reward and that sort of thing. And that all comes about with risk management, and that all comes about in the strategy that we always talk about. The strategy is how to make money. The squiggly lines or the system is just to help you take the high probability on the trade. You don't need to win more trades to make money. And that's what people are not getting across. Everybody seems to think that you need to have a system that you got on a course, and that system is somehow going to win more than it loses, and it's somehow going to make you money in the market. And that's where you fall short. And that's where all of you fall short. I keep trying to explain it, and I keep getting guys that keep coming back to me with the same old story. It is very difficult. I know it's difficult to get over. Good morning, Leighton. Good morning, Sabia. Sabria, how's it? Welcome. Good to have you. Sorry if I don't pronounce your names correctly the first time. Sometimes I have to look carefully. Which reminds me, Sipple won the Schiphol. He's from South Africa, but I do struggle sometimes to pronounce names as well. He won the giveaway last Thursday of the two-step 10K challenge account, and he never sent me his details, and he's just gone quiet and disappeared. So if you come on the show, dude, just please email me, make sure you're okay, because it's very unusual for someone to get something and then just go quiet. It's odd, but okay. We shall see what happens with that. Hopefully he comes on the show and everything's okay with him, because that was kind of strange that he was so excited, and I know he really wanted to win that. Everybody does. And I mean, but he actually mentioned, I'd really like to win this. And then he won it and went quiet. Just wondering where he is, if he's okay. Kind of strange. Very strange. Right after I've sent replies on the comments and everything, and nothing. Just quiet. It also helps if you have your email on your profile as well. I noticed a lot of I try and answer every single comment, and sometimes I'll just go and have a look at the profile behind the comment, get a picture of who you might be or who you are, so I understand who I'm dealing with. But so many people have got nothing on there, no background, no picture. I know some people just want to remain anonymous, and I understand why, but it's difficult to give replies, to understand your situation, and to get hold of people when that situation arises. Interesting though. But yeah, the difference between a system and a strategy, I mean, a lot of you guys will know the difference between a system and a strategy. It goes without saying that the system is all in the lines, and we look at this system and we draw ourselves in a resistance here, and we feel very comfortable with that. Do you know that there's many like pro traders out there, guys who are working in institutions or working on the stock exchange floor, that literally will trade with, for example, an RSI, a relative strength index. That's it for them, nothing else. Overbought, oversold. Oversold, I'm buying. It's overbought, I'm selling. That's how they operate, with large sums of money. Some guy, the very, very old style of trading, some guys will work with moving averages. Others, like myself, sometimes work with some price action. The reason these systems tend to work for us is because everybody's using them. And what you're doing as a retail trader, you have to understand that we only make up a small percentage of the market against the big money. So what we're doing effectively with these charts is piggybacking the big money. We're piggybacking it. They're not hunting out your stop loss. You're hunting out their liquidity. You're hunting out where they're buying so that you can ride the wave with them. When you think they're actually searching you out, you're actually searching them out. And you're looking for that money that they're playing with. If you wanted to, you could dump price action completely. You could dump all the indicators. You could put an RSI at the bottom. You could simply trade on overbought, oversold. And you'd probably run with them anyway. It's a system. It's a bunch of lines. That's not what makes you the money. It just gives you the comfort of I'm taking that trade because I see that. The trick is to have a stop loss in place because you're leveraged. That's why you need a stop loss. You don't need a stop loss if you have an investment or if you have a normal trade with 1-to-1. But when you're leveraged 100-to-1, 500-to-1, even 10-to-1, you've got to look at the scenario of the amount of money you can lose when you're trading, because you're taking $1,000 and buying $100,000 worth of stock. Like that, your $1,000 is gone. So you've got to put stop losses in place to protect that capital. And that's the point of the risk management. If you don't do that, markets move a few percent at a time sometimes. And that few percent is your money that you've put in there. The money you've put up for that leverage is what's going to get taken out. It's a small percentage of what you're buying. That's why you need to manage the risk. You need to manage what you're investing, what you've got available to you. And in particular, a lot of traders out there have only got small amounts of money to trade with, rather minuscule amounts to trade with. And if you lose it, it's gone. Or if you don't manage it, so what are you actually managing? What size account are you actually managing? That's why we've been doing the giveaway on that funded account, and I haven't been promoting prop firms at all. Somebody asked me the other day, and I've said it over and over again. You don't trust prop firms and funded accounts and things like that. The same as I don't trust crypto, but I'll trade it because it's available. It's a trade. It's been put together. You can trade it. It's great. And it's the same as funded accounts. They exist. So we use them. We use them to get our mindset right and to move forward and make some money to the point where you can have a cash account, for example. A lot of you guys don't have huge sums of money lying around just to throw in an account. Do you have $100,000 to throw into a leveraged account that you can risk and possibly lose? I don't know. Some do, some don't. So what I'm saying to you is this year I warmed up to the funded account situation because I looked at it as an opportunity for those who don't have the money to get into the market, and an opportunity for you to learn to trade while you're saving the cash to open a proper cash account, or while you're making the cash from the funded account that you can maybe add into your whatever cash account at a later date. You see, a demo account, somebody said to me the other day that beginners should only trade on a demo account. How's it, David? Welcome. Somebody said to me the other day that beginners should only trade on a demo account. And I thought, well, if you go on the course, use a demo account. And if you're learning in the first couple of weeks, use a demo account. I mean, that's a great idea. But the trouble with a demo account is you don't get the psychology with it. Good morning, Keenan. Welcome. You don't get the psychology that goes with trading on a demo account. You see, it's very, 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 very easy to trade a demo account, because a demo account, all you got to do is choose the trade. All you got to do is use the system. You don't have to manage the money. You don't have to worry about the money in any way, shape, or form, which makes it insanely difficult for you to trade when you start putting real money in the account. Once you start putting real money in the account, you start losing and you start wondering why. You've got to get your head around the fact that demos are different to real. And the funded account in the middle actually helps you get your mindset right, because you've got something invested in it, because you've put some investment into the system. And that investment will work on your mindset, because you want to win, you want to succeed, and you want to start making a profit out of it. You want to start getting some profit share out of the whole scenario. And so many people have said you should only work on a demo account. But at the end of the day, that's not going to help you. It'll help you learn the system, but it most certainly won't help you with your trading or your psychology. I'm really going into quite deep stuff here. I probably shouldn't. Probably should. Step back and have a bit more fun again. Yeah. You see, like David says, I did so much better on my demo. You know, David, every single person that I know did well on their demo or their course or whatever the situation, if you had a course. The trouble with courses is they charge so much for a course, and you don't have the capital to get involved in the market in the first place. So much money gets spent on that course. And I think to myself, damn, you've spent all the money on the course. Now you don't have any money to invest in the market. Now you go back and you put real money in the market and you lose that as well, because the course didn't explain to you that there's a difference between a system and a strategy. They just taught you the system. Everyone teaches you that the system's going to make you money. Everyone claims to have a system that's going to win 8 trades out of 10, and you're not going to lose, and I don't even want to go there. So now you spend all this money on it, and you do this demo, and it seems easy on the demo. It's a bit like, you know, the cycle of doom that I've spoken about, where you get a system, you work with it, it works for a few trades, and then it starts failing, and then you change system, you go to the next system, or you tweak that system, and you find another system that looks far better, and you start using that, or you go on another course or whatever, and then you go to the next one, and it keep on going around in this never-ending cycle of doom. It never works out, it never seems to get better, because you never actually realize or separate the fact that there's a cycle here of understanding that there's a difference, and a big difference, between the system and the strategy. That's the problem. You get caught up in the system, and the system is what's failing. It can't be you. It must be the system. It's the same as when you get involved in trading, and I always tell you that 70% of traders lose money. Or in 5-minute trading, 99% of traders lose money. 99% of traders lose money, and you believe you're going to be the part of the 1%. You believe you're going to be part of the 1% that's going to make money. So that in itself is a problem. It's going to be a problem for you. Because who do you think the 1% is going to be? The 1%, why would you think it's going to be you? When there's pro traders out there with educations who know exactly what they're doing, who've done this over and over and over again, who know everything about trading. So it boggles the mind. It makes me think as to why our minds are closed into squiggly lines. Why are our minds closed into systems? It's because that's what everyone's teaching us, and that's what everyone is showing us. Makes it insanely complicated. You know, Hans says, I've spent so much on courses now, trading on longer time frames, learning, enjoying it more than the scalping. And then Amelia says, hi, is it better to stick to one asset for beginners? No, Amelia, it is not better to stick to one asset for beginners. You see, this is where what I'm talking about now actually starts. They teach you to get stuck on one asset or two assets. They teach you that the squiggly lines are going to make you money, so you must learn all about this asset and how it moves and all that sort of thing. No. Use price action. The system that I promote is great, but use any system that you've learned. It doesn't matter. Use that system to choose your buy and sells, because no matter what system you're using, understand that the market is 50-50. When you take a buy or a sell, there is a chance that can go up or down, whichever way you've chosen. There's no guarantee it's going your way. But that's fine. Then you can choose any instrument on the market to work with, but the way you make the money is with the strategy. And the strategy is always the same. Risk the same amount on every single trade. In my case, I use 1%. You can use whatever percentage you're comfortable with of your account. Don't let your account size grow or shrink within a broker. Keep it the same. In other words, take your profits out. Now, if your account is $25,000, use a $250 risk on every single trade and keep it the same on every single trade. This way, when you lose, you know you're going to lose the maximum of $250. And if you want to get out earlier, cut your losses earlier if you want to. There's nothing wrong with that. What you're looking for are the big wins. So I always say, if you toss a coin 10 times, the high probability is that it will land on heads 5 times and it will land on tails 5 times. But if I told you I'm going to give you 2 for every heads and lose 1 for every tails, you take the heads every single time because the odds are in your favor. That's how we work with a strategy. We try to make more on the win and lose less on the loss. Cut the losses, not the wins. Keep the wins and try and let the wins run longer. I'm not saying you have to force a 2-to-1 risk to reward ratio every time. What I'm saying is don't risk $1,000 to win $50. Try to win more than $1,000 every time. This way, and with this strategy, and even on the systems, if you know your system, you can trade any asset at any time. You can just look at a picture and there's a trade available to you. And if you're prepared to trade any asset at any time, there will always be a trade available for you to take 9 times out of 10. Whereas if you're trading on one asset, 2, you're going to start forcing trades because there won't be trades available for you to take all the time. And what you find is you'll be able to sit in trades for a longer period of time, just leave them, wait them out, wait for them to win in your favor. For example, these trades that we've had on here, we've had them here for a couple of days. And it's taking them a long time to play out because they're on a longer time frame. You see, think of it as if you're trading or trying to scalp or trade on 5-minute time frames, and you look at these charts, when you take it on a longer time frame, just think of it as what's the difference between taking it on a longer time frame and a shorter time frame? It's going to do the same. The charts are going to make the same moves. They're going to move in the same way. The only difference is on the longer time frame, it's going to take longer to play out. So you're going to have to be patient, sit in your hands. But also, the information that you've got off that chart is, of course, far more reliable. You know that there's a lot more trades, a lot more money that's run through that chart, that candle at that time because you're trading on a 4-hour or a day or a weekly. You know that the information in there is solid. It's solid and more reliable and more consistent than a 5-minute. But the chart will still have the same properties. It'll still give you the same results, just over a longer period of time. Why do people trade on 5-minute charts and 1-minute charts, do you think? There's only one reason. And the reason is I'm impatient. I want to make money now. I want to make money today. I can't sit and wait for these things to play. I want to make money now. That's why people scalp. That's why people trade on 1-minute charts. Scalping always ends up in tears because scalping, you win 8 you put a lot of work in, guys. You put a lot of work in. You put your life into this. 8 trades, you win. Oh, man, that was good scalping. I won that. I won that. I won that. And then you get to the losing trade. You can't accept that you're losing because you've won so many, so you can't accept that you're losing, so you must be going to win. So you end up holding on to that loss or dollar cost averaging it or doing something insanely stupid. Doesn't matter who you are or how long you've been trading, you're going to make that mistake. Guess what? You're going to lose all that profit that you made and more, and that's going to be more soul-destroying than you can believe. It actually hurts more. So, and that's the thing that people don't understand. There's a lot of pain that comes with loss. There's an insane amount of pain that comes with loss. people think that it's just material things, that it's just money, but I've seen the pain. And there's a lot of pain that comes with loss. And financial loss has been known to cause some horrible things to happen to people. People do horrible things. So, yeah, do be very conscious of that. If you cannot handle loss, you should not be trading. Ruben, I use 50% per trade. Good on you, lad. Good on you. Yeah. Okay. You see, Amelia, I see you saying here, have a strategy, but there's a lot of waiting until the setup is ready, and it can come at any time of the day. You see, the strategy is not the lines. You've got to separate the two. The system is the lines. So you have a system, and you're looking for a high probability trade. And like you say, it takes a long time for the setup to show up, and then you can take your trade. So if you trade a number of instruments rather than one or two, that setup will show up on somewhere on one of the other instruments, and you can take that setup. All that setup is that you are waiting for is your high probability trade, your comfortable heart feeling when you take the trade that trade's going to work in your favor. It's still 50-50, but you feel more comfortable about it because that setup is playing out, and now you can take that trade. That's as simple as it gets. But the strategy is completely separate to that, because now you take the trade on that setup. What you have to do now is follow a business plan and a strategy which is completely separate from the charts. I'm trying to separate the two. This is what I'm trying to get across to everyone. You have to separate the charts from the strategy. You know that most pro traders, a lot of them don't even use charts. They're actually just listening to the fundamentals. But they work with a strategy. Just like I'm trying to show you now, you work with a strategy. The strategy is to manage your risk, keep the risk the same, make more on your wins. I go over that strategy in just about every normal video that I put out there. So if you really want to go into detail on the strategy, just watch the videos to the end. I try and always go over it. Some people complain that I'm repeating myself, but it seems like I actually need to. So I do, because otherwise people don't put two and two together. It's an aha moment that you have to cross over. It's a moment of, wait a minute, these lines are great, and they give me a setup and they give me a trade, but that's not where the money is. The edge is in your strategy. It's not in the lines. The lines just give you that comfortable feeling that you're on the right track when you take the trade. Because think about this. How many times do you take a trade on your incredible system, even if it was on a demo and it's not real money? But how many times do you take a trade on your incredible system that's supposed to be so great, and you're really confident that setup is played out, and you take the trade and it loses? You think, and then you do it again and it loses again. You think, see, that can't make you money. That cannot make you money. It can just give you the comfort of taking the right trade. You have to separate the strategy from the game. Okay? You can't work without the system. I mean, the system is giving you the high probability trade. It's giving you some kind of edge. Because if I give you a blank chart and I say to you, choose a buy or sell, and you'll go, oh, well, I don't know really. And particularly if I gave you a trade like this one. Let's open that up. There you go. Choose a buy or sell. Choose a buy or sell. Well, I think, look, it's unfair for me to look at it because I'm looking at it and I'm mentally putting pictures all over this, and I know exactly where it's going to go. But a lot of people will look at this and think, well, I don't know. I don't know which way it's going to go. So buy or sell. See, it becomes complicated when there's no lines, when there's no lines there to tell you what's going next. So it's just a high probability trade. It just gives you a feeling that you're doing the right thing. What you need to do is include your strategy in your business plan. Cheers, Hans. Have a good one. I do try not to be boring, guys, but sometimes. But I really am trying to go over this strategy thing with you guys as much as possible. Geez, Triple, if you're here, please let me know, because I really am worried about you, because you actually won the challenge last Thursday and then you just disappeared. So if you watch this, contact me. My email is in my bio, and it's there. Give me a shout. I did actually put all the details in the last week's show as well. Boring is good. Yeah, well, that's what trading is, by the way. And this is that's one of the reasons why you guys have got a YouTube show, is because trading is boring. It really is. But making money is boring, and this is something for you young guys out there. I know some of you are my age, even older. But those of you who are young, listen carefully. Making money is boring. Okay? It's spending it that's fun, having it that's fun, and enjoying it that's fun. Buying the fast car, whatever it might be for you, that's the fun bit. Making it is sometimes horrible and sometimes boring, okay? And, it's never really exciting. But what's great with trading is it gives you freedom, and it gives you freedom to do the things that you might want to do in life. So look at it from that perspective, and then, okay, find other things to do, which I've done all my life. Because I've been trading for so long, 33 years now. I find other things to keep me busy. And recently I didn't want to have any physical companies or anything like that to do on the side, or I don't feel like going out and meeting people at night or anything like that anymore. And so I thought, well, I'll have a YouTube channel. And after I saw all the other guys weren't really telling you guys how it is, and it keeps me busy and I enjoy it and it's fun. And you've always got to, you can't only trade. I got to tell you guys, you can't only trade. It'll drive you insane. And it is boring. I used to find myself starting groups with friends just to have someone to chat to, because the loneliest place you can be is trading on your own at a desk. For the traders that are pros are out there with other people, that's great for them. But if you're alone, it can be quite tricky. Yeah, I like the way you explained it. I just found your channel yesterday. Makes so much sense. Thank you. I'm glad you're here. Welcome. All of you guys, welcome. I've got a question here. Can you please give some advice on stop loss placement? So I know that you guys have seen me do this a million times, so I'm going to do it again because there are maybe some new people on the show. Yeah, you know what I find, Bruman, when you become a profitable trader, you say don't spend your money. Traders are insane. That's why I often say, and sometimes in my intros I say, if you're insane enough to come along on this journey, then join me. Let's go. Because yeah, you're quite right. The more you make, the more you don't spend it. I'm not a big spender at all. I do like the comfort of a large home and nice house and all that sort of thing, but the other stuff doesn't really bother me much. So yeah, I like to take my money and put it into shares and investments, and that for me is exciting, to watch it grow and to see these things happen. So that's where I like to spend my money. So I spend it on investments and I watch it grow, and it makes it more exciting for me. So that's what takes the boredom out of my life. But there are a lot of things that I like to do, and it's nice to have the dosh to go with it. But Bruman's quite correct. We tend not to spend the money when when we make it. I don't know why that is. But yeah, okay, so let's talk stop loss strategy. No, I'm using the wrong US 500 we've already got. Okay, so let's say we were going to take this trade here. This is the Euro Japanese yen, and I would take this trade short if there was a red candle coming out of the bottom here at about 164.80, and that would be a great trade. Let's say we took that trade short earlier on today and it didn't really work out for us. Well, that would be going against us, wouldn't it? Now, what a lot of people do is they make the mistake when they're putting their stop loss out there of putting it too close. Now, I've actually put a video out, are the banks hunting out your stop loss? When's that coming out? Probably the end of the week. And I've got an answer for you. Are they hunting out your stop loss? And if you feel like they're hunting out your stop loss, then you got to look at yourself, because they're not interested in you. You don't mean anything. What they're looking for is liquidity. And if you provide that liquidity and you put the order in the market and it's there for the taking, you're going to take it if it's available and they're looking for it. So you got to look at yourself and say, well, then I'm putting my stop loss in the wrong place. How do I place a stop loss? If I was taking this trade, so I'm just going to put this to the side. Let's just take that out. This would be the order here. And it would be a sell order, so we'd put it on a sell, right? Now, MetaTrader doesn't have this facility. You're going to have to download a little thing off MQL5 if you're trading on MetaTrader. I do have a MetaTrader account, my cash accounts on that, which I use, and that's why I know this. It's much more it's quite old-fashioned compared to the new stuff. I do like this CTrader thing. Okay, so and TradingView is quite good. It can do this as well. It's quite, if you're using TradingView, you do this quite easily. There's a few others. All you do is you say, I need a stop loss. So it's a $25,000 account, so I want my stop loss at $250. But where am I going to put my stop loss? Well, I'm going to look at, there's my resistance that I've taken from the daily level. And I want my stop loss in a place where I feel if the trade reached that point, then my trade would be invalid. If I looked at the trade, I would say, oh, you know what, that's going long, not short. So I wouldn't want to be in the trade at that point. That would be nowhere inside this block. It would be outside the block. And I would say if it breaks through this block, I've got a problem. It's going the other way. So my stop loss is at 167. That's where I'm going to put my stop loss. Because if it reaches 167, I'm sure you'll all agree with me on this picture. If it reaches 167, the trade's gone. It's gone. There's just no saving it. Why would you dollar cost average it? Why would you move the stop loss away? There wouldn't be a trade in any respect, because even if you draw a trend line across here, it's going to crash out at 167. So that would be my stop loss. It's way off the line. It's out of the way. But how do I work that out? So I want it to be 167. So I'll just type in here 167. That's my stop loss. I only want to lose $250. All I got to do is take this and see 0.2 loss gives me $250. Do you care what size the trade is? No. You care what size your stop loss is. And now you want to know that if I put my stop loss there, you want to know that you're going to make more than $250 on the trade. You're not just going to take this trade on a stop loss. You're going to look at the trade and say, can I make more money on this than $250? So then you put your take profit in, which would at least be down here at 160. That's your first take profit. And I mean, if I look at that trade at 160, because that's the bottom resistance, and then there's another resistance further down, what I'm looking at here is a reward of $715 for a risk of $250, that's a good risk to reward. That's an insanely good risk to reward. Can't go wrong with that. Okay. So now you want to take that trade. I don't want to take this trade now because there's a green bar there. Okay. I'm waiting for that bar to close red. Then I'll be happy and I'll take a trade there. But you can see that if that is a red and it starts coming out here, you're going to have a good risk to reward on the trade, and it would be worth your while taking the trade. That's how you place your stop loss. Not difficult. It's actually quite simple. So that will answer your question. Super Earthman, I love your name. Great name. Almost like Sir Lancelot. There's Sir Lancelot here today. I love Sir Lancelot. That's a great name. But Super Earthman, that's pretty good. I like Super Earthman. There's so many people on YouTube with no name. That's crazy. I love the names. The names are lovely. What would you consider as a good day profit target to hit and then stop for the day, maybe a certain percentage of the balance? Okay. So firstly, from my side, I don't target daily profits. And I'll tell you why. I don't target hourly profits. I don't target daily profits. I don't target monthly profits. Because if you do that, you find yourself in a big quandary. You find yourself, you must remember, this is all in the mind. This is all psychological. Okay? So if you put a limit on yourself and a target, let's say you say to yourself, I must make $100 today. I'm not going to say 1,000, 10,000, whatever percentage of a count. Let's say you say, I need to make $100 every day. That's all I need. Nothing else. Come in, take your first trade, and you lose $500. What now? What now? You've lost 5 times as much as you need to win. What now? See, the pressure's on. How am I going to make $100? I've got to, literally on my next trade, I've got to make $600 to make that up. Don't put pressure on yourself because you're going to start making mistakes. Psychologically, you're going to start making mistakes. You're going to start revenge trading. You're going to start doing whatever it takes to try and make that $100. I'll put it in another perspective. Let's say you need to make $100 for the day, and you make 40, and you're getting close to the end of the day. You're going to start pushing for that other 60. I need to make 100. I've only made 40. You're going to make mistakes every single time. Remember, it's all in the mind. You're going to force trades just so that you can make that profit. All I can say is don't do it. What I normally do is I say, over a period of a year, I will normally average make 25, 30%. And on a certain value of money, and that will be what I need to make for the year. If I exceed that, bonus. And if I don't make it, next year's a new year, and we'll relook what target profit or what targets we have for profits. Okay. This way, because you're always going to have losing days, losing weeks, losing months, winning days, winning weeks, winning months. Every time. There's no way around this. Believe me, I've been there 1,000 times. You can't win every day. You can't win every month. It isn't real. It isn't a real thing. Even the best traders on earth will lose a good few months of the year. So, with that said, rather concentrate on the trades and trying to make the trades more profitable, the exacting trades, and then that will come with time. The profits will come. And have a sort of annual idea of what you need to make, and make sure you can cover yourself for a year financially if this is the only thing you've got. It's always better to have a bit of a side hustle. From my side, disclaimer, most of my income comes from my investments because the investments are time in the market. I don't need stop losses and they grow. They always make money. trading for me has always been something to take away the boredom, to keep me busy. And even that gets boring. So, like I say, don't try and force a profit every day. You know, a lot of the guys that trade on the lower time frames will come in and say, I'm only going to trade for 2 hours a day. I'm going to sit down. I'm going to sit down at the opening. I'm going to make my $200, my $500, whatever it might be. And then I'm done for the day. And I say, yeah, I've seen many a day trader do that. And I've seen many a day trader come in, sit down, all confident, I'm going to make my $500 and then I'm off for the day. I'm going down the beach, which I do anyway because I position trade. I take my positions and I can go down the beach, which I'm not going to do today because it's winter. But anyway, so you sit down with all best laid plans of mice and men that you're going to make this money. And you sit down and you take the trade and you lose the first trade. And you think, oh, okay, that's not going well. I'm $200 down. And I've got to make $500 to go. So then you take another trade, you lose the next trade, and you're $400 down. Don't tell me you don't lose trades. Everyone loses trades, okay? So now for you to make that $500, you've got to make $900 and the 2 hours ends. You're $400 down, the 2 hours ends. Now you have a decision to make. Do I only work for the 2 hours and take the $400 loss for the day, which is really not in my plan? Or do I sit here the whole day trying to make that money back and trying to make my $500? Well, I can tell you now that every single trader that I know normally ends up sitting there the whole day trying to make the money back, watching the charts. In fact, not even for the whole day, more like for 12 to 14 hours because they're struggling to get it back. And then they end the day on maybe $100 down, break even, or $50 up, or whatever the case. But they certainly didn't make the $500. Best laid plans of mice and men. Now, there are traders that have got my sort of experience, years of experience and whatnot, that can maybe sit down and do that kind of thing. And even they have losing days many times. So, you know, that's why I say the market's 50-50. Don't think because you've got 30 years experience that you're now going to win every trade. That's definitely not the case. In fact, you'll be very lucky to break even. It's not easy. It's not. You are calling something. The only advantage I have over a beginner is I can see the market. I've got experience of what I've seen before. I know what it's done last time, what it might do this time. So I can look at a chart and picture it a lot quicker. And I can make a quick decision as to which way it's going to go. Got an advantage. The advantage pays off. It's experience in the market. But that's what everyone needs. You need experience in the market. You need time. You can't learn this in a week. So many people tell you can just get into trading with $100 and make thousands of dollars with no experience. And that's just not going to happen. Not going to happen. Okay, so, Super Earthman now asked me, so how do I know when to stop for the day? Okay, and that is a really, really good question. How do I know when to stop for the day? Look, if you're day trading and you're new to trading, you're probably going to lose. Sorry, but 99% of traders lose. 5-minute trading is an insanely difficult thing to do. So you'll find most traders that have been in the market for a really long time, I don't say all, but most, end up trading on higher time frames like 4-hour, day, that sort of thing, because we figure out that there's not much reliability on the lower time frames. But the only way, if you're going to trade on the lower time frames, is for you to decide for yourself how you're going to work your plan. Are you going to trade all day? Are you going to trade for 2 hours? Are you going to trade a certain amount of time? And the only way to do that, because you can't work it on profit and loss, because you'll have losing days and you'll have winning days. So if you want to do it that way, the only way to do it is to say, I'm going to trade for 2 hours, and whether I win or lose, that's it. But the way we trade, the way I trade, is I position trade. You would call it swing trading. I don't know why everybody calls it swing trading these days, because in our days, swing trading was you buy at the bottom and then you sell at the top, and then you buy at the bottom and you sell at the top, and you stay in the trade. That was swing trading. But position trading is what we do here. Position trading, I take a 4 hour, I take my levels, and I say, I want to buy the US 500. I buy it at this level. Where did I buy it? I don't even remember. I buy it at this level, which was 58 something, okay? And I position my trade, and I say I put my stop loss here, I put my take profit there. That trade's positioned. I look at my trades in the morning, I take my trades, then I leave them. And then I come back and I've come back and managed this one. Obviously, I've put a trailing stop on it now. I moved the stop loss up to cost, and I've put a trailing stop on it now because it's in profit. This way, this trade is now free. Whether I win or whatever happens here, the trade is free. I'm not taking any loss on this trade now. Okay, I've just managed the trade. That's all I've done. But I haven't sat looking at the chart all day. I come in the morning, I look at what I need to trade, put my trades in place, and then I go and do my thing. Okay, whatever I might be doing, making YouTube videos, whatever. Then, during the day, I might come back and have a look and say, let's see if there's anything else coming about. Different opening time, maybe US Open, maybe some other time. See what's happening there. Maybe take another trade or not. Put it in place, leave it, walk away. That's my trading. I don't sit watching the charts. I don't need to. I've positioned it. I just come back from time to time and manage it. And you know what? Most of you have got a mobile phone that's got this on it. So if you're out and you're just not sure and you want to check on it, you can check on it. It's there. Even if you're at a restaurant, you can check on it and just see if you're worried about your trade. But if you're worried about your trade, you've traded too much. You've put too much into it if you're worried about it. If you can't afford the loss, then you've traded too much. Watch how much you're risking, because that makes all the difference to your psychology as well. And there's Sir Lunchalot. How's it, bud? Good to see you there. Good to see you there. So it's the type of trading that you do that will determine how you work out your day. You know, the trouble with 5-minute trading, with the day trading side of things, and this is what I found when I used to do it, is that you have a plan that you're only going to trade for a couple of hours, and then you lose, and then you end up sitting there the whole day. You will inevitably. It's just psychologically how it affects you. You don't. Nobody wants to walk away from a loss when you've got the opportunity to try and get it back. I actually invented a rule for myself, even in position trading, where if I take 3 trades and I lose 3 trades in a row, I step back, walk away, come back tomorrow after I've had a sleep, because it clears your mind. You find that if you're taking trades, it's not the system that's failing, it's not the market that's failing, it's you. It's your mind that's clogging up or misting up that's causing all the problems. So don't let your mind get to you. You've got to get over it. You've got to, like I said to you earlier, the pain of losing is probably one of the most severe pains. You find people that go bankrupt jumping off of buildings and things like that simply because they can't take the pain of losing. It's a very, very, very dangerous pain. And then before that happens, the fear is quite immense as well, and it can be quite tricky, which is why I say you're going to have an insanely strong personality to be able to say, I'll work for 2 hours on a day trade, and if I lose, I'll walk away. Not going to be easy for you. Not going to be easy for you. That's why I take the position trades. I take a position trade. The psychology behind this is actually quite simple. When I take a position trade, I've already said, okay, my position trade, I'm risking $250 on this trade. That $250 is already written off in my mind. That's how much it's going to cost me. And then I'll take as many trades as I can afford to take. If I say I can afford to lose $1,000 today, so I can take 5 trades, that's it. End of story. That's it. Or 4 trades, sorry. That's it. I'm not going to take more trades than that. And then if I lose them all, then I've lost my maximum and I accept it. I know I've lost it. But if it wins, then great. You know, I'm not sitting there watching it. I'm not sitting there stressing about it. I've taken the trade. I've taken the position. Walk away and leave it. I'm paying for it. And then, for example, when it goes into profit, then I take my trailing stop, moving up into cost. Then the trade's costing me nothing. Whatever happens, happens. Easier that way. Less stress on the mind. Less psychological problems. Stops you from going crazy. Now, you know, with the cash account, I'm much more, this is a funded account, right? So with a cash account, I'm much more careful with the weekend trading. So for example, holding a US 500 over the weekend long would be difficult for me to do. I'll do it, but with great caution, because the margin calls can be quite tricky on leverage trading. So I'm heavily invested in the US 500 on a one-to-one cash account on an ETF exchange traded fund. Whereas on the leverage trading, I'm much more careful. But on a funded account, there I'm not too concerned, because you only pay for the funded account. If it goes down the toilet, it's okay. But on a real account, what I do is I look at my risk over the weekend and where the world is going. And you do have to be careful with someone like old Trumpy in charge of America at the moment, and all the threats and that going on. Because if you wake up on Monday morning and the geopolitics have gone insane, you could have a rather big account from your broker if things have gone against you. Because you don't just lose what your leverage. If it opens up on Monday morning with a huge gap, you owe them that money. So if you leveraged $10,000 to buy $1 million and the account lost $500,000, then you owe them $500,000. Just remember that when you're trading over the weekend. Blue Mango, what prop firms do you recommend for funded accounts? Okay, understand one thing, guys. I never, ever give advice or recommend anything. Everything you see here does not constitute financial advice. I do this, firstly, to help you guys. Secondly, to keep me busy, and I like the company. So, but I have left links for you in the description to FundraFX, because FundraFX kindly provides the 2-step 10K challenge free account on Thursdays that I give you guys on the giveaway draw. So I put a link in for them. And then I have the other one, the funded trader markets, which is there. It's been there for a long time, because they you know, provide with certain aspects and help to train you guys. So yeah, further than that, there's many out there that you can choose from. The reason I put those 2 in there is because they don't stop you from trading over weekends. So if you leave your trades in, there's no problem. They don't stop you from trading with the news. They don't have limitations on how you trade and all that type of stuff. So it's very much just like trading a normal contract for difference or futures or whatever the case. So they allow you the freedom of that. They do have drawdowns and that sort of stuff. But yeah, they just give you that freedom, and it gives you the opportunity to get ahead. So like I say, if you're looking for something, that it is there. It's available to you. But choose whoever you want, guys. And all I always say to you about funded accounts, guys, is understand one thing. Don't leave all your profit there. If you make profit, as soon as you're allowed to withdraw that profit on that amount that is, take it. Okay, take it, and you've got your money. Okay, don't leave profit in an account like that. You know, I can't sit here and promote prop firms in any real way, shape, or form. All I can tell you is they're a necessary evil at the moment, and they're useful for guys to get into the market and have a bit of capital and maybe get some profit out of it if they're good enough to do it. If they don't have the capital to put real money in, and also if it's the only capital that you've got that you're risking, that can also be quite dangerous. So maybe it's another route for you to get comfortable with the markets before you put all your hard-earned cash into a brokerage account. There you are, Chepo. Chepo, I've been looking for you. You haven't sent me your details. So hang on a sec. I'm going to tell you, either give me your email address or do this, because I thought something had happened to you, man. I just want to give you this. Hang on. I'm going to copy it in. This is for Chepo. Chepo, please read this. Okay? I need you to send me your details, or at least give me your email address. Okay. Good. There we go. Yeah. Been worried about you, man. I haven't heard from you. Yeah, good. Yeah, we can't put his account together because he hasn't sent us any details or anything. We haven't received his email, and I can't set him up. Okay. I want you to have your stuff, man. You can get going. So just email me that stuff, please, and then we can get you going. Really important. Okay, good. Yes, I thought something had happened to you. That's good. I'm glad you're right. At least you're there. Okay. The other reason I can't get hold of you is because you don't have an email in your profile. And I can't get hold of you that way either. Yeah. Chipper was last Thursday's winner. We haven't been able to set his account up because he didn't send us any details. So yeah, that's what I've been looking for him for. Really important. Really important. But yeah. So as we were talking about, with all the things going on and how things are working, yeah, use that email address, newmarketsx@gmail.com. Use that email address and just email me those details. You see the email address is there. Otherwise, give me your email address here. I'll contact you and I'll send you a message. But that's fine. Just drop me that email, okay? With all your details. And we'll set you up quickly. You'll have your stuff. Oh, yeah. There you go. So, Peppo, can you see my email there? Can you see it on that message? Can you check it out? Just use that, okay? And that'll be fine. And then you'll be able to contact me. Do you ever take trades before a candle close? If you do, can you give me some? Hi, Philip. Welcome. Good to see you again, man. Hey, lucky to have you. If I take trades before a candle close, it's because my brain's telling me to take a bit of a chance. I prefer for the candle to close before I take a trade, because then I know it's closed and I know it's, pretty much going in that direction. So, for example, if you look at this Euro Great British Pound trade here, and you see it's broken through there, and you think, wow, look at the size of that green candle. This is surely a long trade, surely. And that trade's actually closed. I mean, that candle's actually closed. But if that was still open and you were trading, how do you know it's going to close green? Because what sometimes happens is you get this long spike back where all the sellers come back into the market, and then you get this red candle down here. You see on the left, you get this red, turns red. This one fortunately stayed green, and it looks like a good long trade going there. The candle's closed. You could wait for it to come back and retest before you take it. That might be better. But what sometimes happens is you get this insane move, especially if someone's talking. That's a good point. If someone's actually talking, that happens. You see, like over here, you get this candle here that's green on the top. That might have been red. It would have come all the way down here, gone red, someone talking, and then it goes all the way back. All the way buyers come back in, turns green. That's why you wait for it to close. So what I'll normally do if I feel like taking a chance, if I see a long candle like this, and it's really close to the candle closing, and it's there's not much time left. I know it's gonna, in all likelihood, there's nothing else happening, and it's gonna close there. Then I might take a chance. But that's me being impatient and not sitting on my hands. You should really sit on your hands and wait for it to close, because it also tells you, because even if it closes, so if it closes and it's a hammer or something to that effect, the candle, then you're kind of looking at it and thinking, should I or shouldn't I? Still don't like that candle there. There's a big tail on the top here, a little green body at the bottom, and you're thinking that might still, go the other way. It might still go down. So just be careful of that. I'd rather wait for the candle to close, but if I do take it before the candle's closed, it's normally so close to the candle closing, and it's also pretty much a really big candle like that. Just watch out for that. And also, I don't play as much into the candles as where it lies on the chart, as well. If it looks like it's still bullish or whatever the case, for example, there. So a candle like this, I look at that as an undecided candle. Do I take it? Don't I take it? I've also got to look at where it is. Is it coming back into a level of demand or supply? Is it hitting a trend? All these different things that you've got to keep an eye on. But no, I prefer to wait for the candle to close. Philip, you have missed my lesson on system and strategy, but I think you know it well. You've probably watched my videos where I just went over the big difference between system and strategy, that people still struggle to separate the charts from the strategy, the system from the strategy. We need the system and we also need the strategy. I went over that in quite a lot of detail at the beginning of the video. So if you want to go back and have a rewatch of that, I go over that in quite a lot of detail, because it's important to me. I see it all the time, particularly in the comments. I see it all the time where clearly the person who's watched my videos has not understood, and that worries me that I'm not getting it across, even though I'm repeating myself on a regular basis on every video about the strategy. I seem to be struggling to get it across because there's so much push towards all the other people teaching you to trade on the charts. Yes, we trade on the charts, but the charts are not making you the money. They just give you the ability to manage your risk and to take a trade. That's all they do. Okay, have Rob, great detail and really helpful. Good, Philip. That's great. No, that's great. Good stuff. So, Chipper, the sooner you send me that stuff, the sooner I can set you up. So don't forget to send me the information. And like Ruben says, keep it simple. Keep it as simple as you possibly can. Always, always, always keep it simple. And like I say here, guys, I don't know, I have showed you in previous videos as well. When you take your trade, you know that my US 500 trade, when I took it, my stop loss was down here. Nice and far, safe, all good. And it would have cost me, I think, on this particular trade, and I've got it on a 100,000 account as well. That was $1,000. This one's 250. Then what I do is I take my stop loss when it's in profit like this, just move it up to cost. And on this one, I've attached a trailing stop as well, so I can just trail it up with that space. That way I know this trade is now costing me nothing. It's free, whichever way. If it wins, bonus. And if it goes against me, I'm not losing a cent. And that's what you want to do with your trades. Try and make them as cheap as possible and as free as possible. If you leave your stop loss in place, and the trade turns against you, then that trade's still going to cost you that money that you risked in the first place. Now, it ain't going to cost me anything. Okay, so let me check. Boom, boom. Okay, so you've sent me your email address. So I'll send you an email right now. Going to what you need to send me. Excuse me, guys, while I type to Chipper. Okay. Sorry about this, guys. There we go. If can open your account. There we go. And I'm just going to copy this over for you. There we go. Okay, so Shepa, I'm sending you an email explaining to you what you need to send me. Send that to me and we can get you going. Okay. Logical trading. Okay. I need your name, your age, email address, the city, country, your phone number, and that's all I need, and then we can get you your account. Okay. Cool. Easy peasy. Right. Sorry about that, guys. We need to get that resolved because, I mean, he's been waiting for it over the whole weekend, and you've probably been waiting for my live show to tell me. Okay, so I've been trying to contact you. Okay, there we go. Now I've sent you an email back. Go and check what I asked for there. Give me those details. I can give it to Conjure FX. Corey will contact you. You'll have your account in the next 48 hours for sure, and you can get on with it. Okay, great stuff. Well done, dude. Hi, Rob. I'm watching Aussie dollar, US dollar to reach about 66 for a possible short. What do you think? Aussie dollar, US dollar. Do I have it on here? Aussie dollar, US dollar. Aussie dollar, US dollar. Where are you? I normally always have it. Oh, there we go. There you go. Okay, so you're looking at a short trade. Aussie dollar, US dollar is There's a double top right there at 0.6536. So your short trade pretty much is from this level. It's gone back and retested and going short. So what I would say here is watch out for this, okay? Probably going to come back and hit that and continue on long. You're probably going to be short from the, let's put that there, put another one in. Yeah. It's still bullish, okay? From the 66, you probably will get a short if it breaks through this level. But it'll probably go short from the 65.36 if I say anything. But then there's another level right here that gives us confluence. I'm just going to just put the demand level in here. Look at that. There's a level here. That level is also quite important. And then, yeah, so if it comes back into that, it's going to go long as well. And then we can also go and draw the resistance and the support in and that sort of thing as well. Yeah, I would say it's still going to go long for now. I'd say I'd rather take long trades on this as it stands at the moment. If it does get to 66, you'll probably definitely be in with a short, but I think you're going to get a short long before that because there is already a double top at 65.36. That's probably going to go short from there, but at the moment it's a long trade. Good morning, Dave. Okay. Good morning. Just saw one of your videos in my algo. Great video. I've been listening to your live today. I'm enjoying your knowledge. You gain a new subscriber. Thanks, bud. Welcome. Welcome to the club and welcome to the A team here. The live shows here, we all get together on the live shows, and you guys actually, if you have a trade that we want to take or we discuss it here, we talk about it, and sometimes we'll even take it on these platforms. Most of the trades that have been taken on this platform, this is a funded account, it was for you guys when we were a much smaller group as well. And the trades that were taken here were actually chosen by you guys, not me. But okay, the last two I chose, the Brent and the US 500, okay, I get that. But there's a lot of other trades on here that you guys actually chose. Okay. And yes, Bruman says smash the like button. Please do smash the like button. I'm actually challenging myself to grow this account. And I remember I said to you guys at the beginning of the show, trading is boring, so you end up doing other things. And I decided now recently to do the YouTube account a year and a half ago, I think. And I've challenged myself to make this a successful YouTube account with like maybe 100,000 subscribers, and that would just like give me a noddy badge, you know, make me feel good. So it's a bit of fun. Okay. I apologize for asking so many questions. Last one, if you don't mind. Do you consider volume when entering a trade? Not anymore. I used to, but not anymore. You can, obviously. Volume's important, you know, but the problem with trading is what you find yourself doing is adding too many things onto your chart, adding too much stuff in. So I could have the RSI on here, the MACD, the volume, the whole list of things. And then I'd look at the chart and I'd be like, where's it? I wouldn't be able to see what's going. I wouldn't be able to see the chart, you know. I realized many years ago that it's all 50-50 and it's all a load of whatever. So what I do is I look at it for what it is. What you use volume for, if you've got a small move and a lot of volume, is pretty much strong. And if you've got a big move and no volume, it's pretty much not worth getting involved. So that's kind of all you use it for. It just kind of tells you whether the volume is going with the trade or against the trade. That's all it does. Do you need it? In extreme cases, yeah, you can put it on. Sometimes I have it on one of my other platforms. I see it. I don't even take it off. But if it's in the background, it doesn't affect my trading much. Not enough to write a book about, that's for sure. No. It's just there. I don't want too much stuff on my charts. So if you want to use volume, by all means, it's actually an important thing, but it's not something you would trade with. It's something that will give you confidence in your trade. It will say to you, yeah, that candle that moved so vastly, it's genuine because the volume moved with it. But what I found with that is 8 times out of 10, it's normally the case anyway. You know, that very, 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 very seldom that you get a situation where the volume's really poor and the move is big. It's very, very seldom. It might happen over a holiday period or something like that, but generally, in general, things match up and work out, and people play too much into volume. Your sole job in the market is to look for liquidity and piggyback the pro traders because you're a retail trader. So your sole job is to look for that liquidity, hunt them out, and ride with them. Okay, they're not hunting you out, you're hunting them out. That's how it works. Okay, all they're looking for you is if you've left an order in place for them to grab the money. And please, Blue Mango, ask as many questions as you want because that's what we're here for. We're having a bit of fun together. And that's what the live shows are specifically here for as well, so that we can talk about this, so that you can get a bit of information. Because if I make a video, if I make you an educational video, a video about trading, I can only make the video based on what I think you guys might want to hear, what I think you guys might want to know about. You can't speak to me, you can't answer, you can't ask questions. And you watch the video and you think, okay, that's great, wait for the next one. The reason I put these live shows out was so that you guys can discuss this with me, we can interact a bit, and so that you guys can ask the questions. So please feel free to ask the questions. I don't mind them. If I can't answer it today, we'll answer it whenever. I'm not a genius, I can't answer everything, but I can help you as far as I possibly can. Last night on my progress on the trading view, the leap challenge. Well done, Dave. That's great. Progress on the leap challenge. Well done. Well done. Just remember that demo is different to real, eh? But like I said earlier, the pain of loss of money is insane, and that's where the difficulty comes in. Next, to get the funded account out of the red. Dave may bring me also some drawdown. Thank you, Rob. Have a good live session. Time to head out for work. Good luck, Dave. Thanks for being here. And Blue Mango, thank you so pleasure. Absolute pleasure. Okay. Chapo, don't forget to send me those details. Really important so that I can get you set up. And that'll be great. Love to see that. Get you going. For those guys who join us on the live show on Thursday we have the draw, and the rules are in the description. Very straightforward, guys. I have a draw every Thursday for a two-step 10K challenge account from Fundra FX, kindly sponsored by them. And what they do is they'll put that together for you, and you can have that to play with, and and enjoy. And if you pass the challenge, you can get the profit sharing and all the rest of it. And the only thing to be part of it is just to have commented in one of the videos. We choose a video, we do a draw on it, a random draw, and somebody wins it. And that's if you join us on Thursday for the live on Thursday. But the live on Thursday is a little bit later. It's at 2 o'clock in the day. I'm considering, I'll see how this Thursday goes, but I am considering moving that around a bit. But for now, it's at 2 o'clock GMT plus 2. This one's at 1100 GMT plus 2. That one's at 1400 GMT plus 2. I do that because I'm trying to include everybody around the world. But I'm seeing the Thursday one sort of peter out a bit, and this one is a little bit more fun. So let's see. I'll see how I'll work with that, and we'll see how that works out. But join us on the Thursday if you want to be part of that. If you want something like that. Not everybody wants a funded account. Not everybody wants one of those. Most people just want their cash account. And as I've said before, the best account you can ever have is your investment account. Your investment account's the best you can ever have. It's time in the market. You buy something, set and forget. Do you know how I buy my shares, guys? I look at what I think will be a good company. So if it's here in South Africa where I am, then I can see the companies around me and I can see how well they're doing. Or if it's in America that I'm buying, then I look in the general picture of, is Alphabet a good company to buy? Is Nvidia a good company to buy? Amazon, McDonald's, Coca-Cola, to name but a few. Can't buy everything, but I buy what's out there and then I add to them every single month. I don't buy them and sell them. I don't trade them. Effectively, what I do is I buy them and I add to them all the time. If I see an investment going sideways or not doing well, or there's somebody in the news saying this company isn't doing so well, then and only then will I relook the investment and say, well, this particular product isn't doing so well, or company, or whatever the case. Then I'll sell every single share in that company that I own, and I'll put it into another one. And I'll first have another one to buy. In other words, I'll say, I'm going to get rid of this one, and I'm going to put it into this one because I feel this one's a better investment. I'll take that whole investment out, and I'll put it somewhere else. If I see a company is like looking really sad and it looks like it's going to go off the boil, like IBM or something like that in the past. This is an example. So I'd sell IBM and buy Apple, for example, that kind of thing. So yeah, the investments are always the best way to go. Trading was the reason, my main reason for trading, and particularly leverage trading and having contract accounts and things like that, was to take away the boredom and to, have something to do. But then I found that even that can be pretty boring. So I've done a number of other things in my life. I've had businesses and shops and whatnot. So I thought, well, now that I'm older, I thought, let's have a bit of a YouTube channel. So we've done that for the last year and a half as well, just to have a bit of fun. Keeps you busy, keeps your mind busy, so that you don't sit and rot and get lonely watching charts. You can't sit and trade all day, guys. It's going to drive you insane. Okay, it's going to drive you nuts. So don't try and sit and trade all day. Dave, maybe some drawdown. Thank you, Rob. Have a good life, sir. Thank you, sir. Because he sent his stuff. Let me have a look here. Gotcha. Okay, there's your stuff. This is fantastic. I will send it off to Corey now while we're sitting here talking, and he can actually get hold of you later and show you what's going on. We haven't even gone through the news today, have we? Let's just have a look here. And let's just go through the news quickly. We haven't been through the news today. Let's have a look if there's anything in here of any interest to us. Ryanair buy 30 new jet engines. I want $500 million. 30 new jet engines cost $500 million. Thank heavens I don't own an airline. I think I'd have a heart attack. Hyundai Motor has a rare earth stockpile that can last about a year. US Business Group says Washington should treat Taiwan like a partner. Yeah, I see old Trumpy's having discussions with China again. Trump says China not easy. Maybe he's not easy as well. Apple touts major software overall but stays quiet on AI. Johnson surges to Senate. The bull case for stocks is growing. Disney to pay. So Robinhood tried to get on the S&P and didn't. So they got their asses. Morgan Stanley hunts for AI debt buyers, blah, blah, blah. Okay, that's interesting. This is Fundro FX. This is the guys that are supplying Al Chapo with his account now. I'm going to give the details to... hope you guys' stuff is all still there. Let me just check here because it does appear to be. Hang on, what's going on here? Why is this disappearing? A bit of a strange one. There you go. Put that back. Hopefully it stays there while I go and sort something out. All we need. Okay, let me just do this. Sorry, this is last week's winner. Okay, there we go. Perfect. Good show. Let me just make sure that you guys are still here. Yeah, there you are. Well, you're on, you kind of just disappeared. What happened there? Anyway. Okay, so that's sorted that out. That's perfect. All right, Hippo, you'll get your thing. That'll be sorted out. And well done. I'm glad you actually got that. Rob, how long do you hold your trades? Weekdays or intraday? So that's an actually... and Ari says, I just turned in. Am I correct? You're trading with trend lines. Ari, I trade support and resistance. And I trade with trend lines. And I throw a bit of supply and demand in between. Okay. You know why I trade with trend lines? Before I get on to Shepard's question. When I started trading, we didn't have computers. We didn't have anything. We used pens and pencils. And really the only way that we could figure out what was happening was with trend lines. We used to draw the lines in. So I still use them till this day. As old as archaic as it is, I still put them in my charts. Now, the reason I use them in my system is simply because they tell me when a structure is breaking, and they just give me a sort of direction as well. So, for example, this Euro Great British Pound here, there is what was support. It broke through the support, came back, retested, went down, went up to retest again, went down. There's another support further down. So that's your support and resistance. This now becomes resistance because it's broken through. Now it's breaking through the resistance again. But what does the trend line give me? It gives me confluence of, oh, wait a minute, there was a trend to the downside. But now it's broken through that and it's breaking to the upside. So it's breaking structure and it's moving the other way. The trend lines do that for me, but they also do this for me. I can see, look, here's the US 500, right? The US 500, what's support and resistance going to help me on the US 500? It's just going straight up. It's really difficult to work with a normal support and resistance on this. That's better to work with the trend line. The trend line is the same as support and resistance. It's just working at a different angle. That's all it is. Brent crude oil. There we've got our resistance, but we've also got our, you see, if I want to draw a trend line in, it's quite simple really. Hang on, let me just change the color here. Need to make it yellow. And then if I want to draw a trend line in here, it just gives me an idea of where it's going, if it'll ever allow me to do it. See, if I draw a trend line in there, now I know that if it comes down, breaks through the level of that trend line, then I know it's changing structure and going the other way. I can also take the trend lines and move them around and see where I am. It just helps you to understand price in amongst the support and resistance. So I mainly use my support and resistance with my trend lines and with my supply and demand as well. And if you know how to get supply and demand in, that'll also help you a lot. That just gives you an idea of trading, but I don't want too many lines on my chart. I don't want too much stuff going on my chart if I can help it. I'd rather do without it. And then Shepard asked, how long do you hold your trades, weekdays or intraday? So here's the thing. How long is a string? And that is always my answer to that, because I hold the trade for as long as I need to hold the trade. I don't hold the trade for a specific time. So when I take a trade, I don't say, I'm taking this trade and I'm putting it in that box, and it's only going to live in that box. That's my trade. I don't do that. I never do that. I actually take a trade, and I take a trade with a view to making a profit on it. So, for example, you take this trade, and you say to yourself, I've taken this trade until it makes that profit. Not for the day, not for the hour, not for the week. I've taken this trade. If it takes a year to get to that profit, then so be it. I took the trade to make that profit. Obviously, if it's getting a bit tedious and I'm sitting in this trade and it's making tiny little thing as doing nothing and I can see it's going nowhere, then I'll dump it and go for something else. But, I don't take a trade with a time frame on it. I take a trade with a view to it either taking a loss or making a profit. There's no, I'm taking it for today or tomorrow or whenever. It's a more permanent sort of effect. Right. Kirk. Hi, Rob. How long were you at the break-even stage of trading before you started turning a consistent profit? And Ari says, thanks, Rob. Yeah, probably quite a while. And the problem you're going to face, I don't know how long you've been trading or what, but people think, and this is where the problem comes in with trading, is people think that you're a losing trader, and then you're a break-even trader, and then you only make profit for the rest of your life. I've got bad news for you. What actually happens is, yeah, obviously in the beginning you're a losing trader. There's no way around that. And yes, you do get to the point where you sort of feel like you're breaking even. And then you get those profits, and then you start getting those profitable years, and then you have a losing year. And you think, well, what happened there? And you have to start rethinking things. Unfortunately, that's the way the trading world works, because it's 50-50. Doesn't matter how long you've been trading. You are going to have times of strife, times of pain, times of loss. It's not a consistent curve. It's not great. There's ups and downs along the way. But yes, you do have the experience, you do have the success, and you have more successes than failures. But it's not perfection. It's trading. So there's always going to be those moments in time where things aren't working out so well for you. Keep that in mind. That's unfortunate, but it is what it is. But yeah, you get to a point where you can make consistent profit. You can get your annuals, and you can have a profit at the end of the year every year. But like I say, it's not smooth riding. You get 1 or 2 years or 1 or 2 times where things go pear-shaped and they don't work out as well as you expected them to. And you've got to understand that those times are going to be around. They're not going to be perfect. That is important. People expect it to just go on this trajectory of just winning all the time. The only difference between then and now is then, if you lost, you kind of didn't have much of a buffer. Whereas now, if you take losses, you've got all this buffer that you've made up over the years. So you've got some comfort of risk that you can take. You can take more risk because you've got more buffer. That is the big win of experience and time, and what's in the market. So if you take losses now, they're not as bad as what they were right in the beginning. It was like you started trying to remove emotions in trading. And that's the idea, is to remove the emotion. You have to remove the emotion, but you can't. Everybody says remove the emotions, and yeah, the idea is to remove the emotion, and that's what I try and do. I'll put a position in place, I walk away, I leave it. You try and remove the emotions, but the emotions are still there, because when you come back to a trade and it's gone wrong and it's gone pear-shaped, the emotions are still there. You're like, it's painful to lose. It's not nice to lose. It's annoying, and sometimes I get upset, and I'm like, why? How could that lose? And you still have to get your head around it, your psychology around it, and understand that you are going to take losses and they are going to work out. Which trades lose are the ones that you are the most confident on. Those trades. And that's why I always say keep the risk the same. You'll get that trade, you're going to say, that's the one. That's going to make me so much money. And then you're going to pile everything, the kitchen sink, everything in there. And then you're going to destroy your business plan with that, because you just know that's the one. I'm piling everything in there. The all or nothing. That's the one that's going to lose every time, without fail. That's the one that's going to hurt you. You're going to come back and you're going to be angry, because that one should never have lost. But what causes it to lose? People stand up in the world and they say stupid things, or something happens and it all changes. It's a difficult world to maneuver. When you said, you become a break-even trader and you become a profitable trader, and then 2008 happens. And Bernie mates off with the money. Bernie Madoff. Who forgets him? Lehman Brothers collapses over the weekend. Wow. I was lucky at that time, but many of my friends were not. And it's horrible to see, and it's painful. I don't know why I was lucky at that time. I had a gut feeling, and I was fortunate enough. Even my investments, I don't know. I never, ever, ever, ever sell my investments. That time, I sold them. I had very little that was there to be taken out, and I actually couldn't believe my luck. Sometimes you're lucky. It's like a little voice in your head. But let me tell you, there's been a few, 1997, 2008, and even recently with 2020, and then those years to walk from 2008 to 2011 was just like a rocket as well. That made a lot of people a lot of money. Yeah. You lost money in the FTX scandal, yeah. No, it's always there. These stories, I can tell you guys stories, man. So many stories. It's like Herc says here, how often in your journey as a trader have you made massive adjustments to your trading system? And that's the one, Herc, that I keep telling you guys about, and this is why I tell you about this. I call it the cycle of doom, where you're losing on a system that you know has worked for you. And what do? You tweak it and change it because you're losing, and you obviously in your mind believe that it's the system that's failing. It's psychological. And this is a system that's worked for you for a couple of years. Now suddenly you're not winning, so you think, oh, I've got to change something. So you go hunting everywhere looking for something, and you find something that looks better than what you're doing, so you go for that, and then you go and play around with that. And then that works for a while, and then that starts losing, and then you go to the next thing and the next thing, and I call it the never-ending cycle of doom. The way I get through it is I always end up going back to basics. I always ended up going back to where I started. I always, it's like when I lose 3 trades in a row and I stop and I just go to sleep and come back the next day. I rethink it. So when I rethink things, I always go back to the start. And how many times I've sat down and gone back and said, when I started trading before all the computers, what did I do? How did I make money? How did I work this out? And, I always end up back at the most basic and the most simplest things, like trend lines or support and resistance, or, a moving average or something stupid. It always ends up back there. And that's why I use support and resistance and trend lines mostly in my trading, because that's all I had in the past, and it makes sense. Also, understanding that the system is not what makes you money. You get to a point in your career where you realize, hang on, it's not the system that makes you money. When did I have the aha moment that it's not the system that makes you money? When did I realize 100% that the system doesn't make you money, that it's not the system, that it's the strategy? You know when? 2008, that big crash. That's when I realized, hang on, it's not in the lines, it's in your strategy. It's in your risk management, how you manage your risk. Because all I did back then, effectively, was manage my risk. And as painful as it was to be selling out of trades and selling out of investments and before the weekend, before Lehman Brothers collapsed, as painful as that was, and I was thinking, I'm doing the wrong thing here, I'm going to be sorry on Monday. And I was the one that wasn't sorry, because I effected risk management. I was careful. I got out, and it paid. It paid off. And then my brain went, hang on a minute. This has got nothing to do with charts. This has got nothing to do with squiggly lines. This is all about your strategy. This is all about looking after the account. 2008. That's actually what woke me up. Woke me up big time. I mean, up until that point, I did exactly what Herc was saying. I mean, kept looking for new systems, kept changing my systems. I used to have those charts that many of you guys have got, where you look at it and you just see lines everywhere. Lines, loads of lines everywhere, up and down, and you can't even see the chart. I used to have that. I used to have loads of them, and like blocks on the bottom, and that was my thing. I had loads of charts like that. I used to think that that was what made you the money. I believed in it. I believed in it wholeheartedly. And I actually, like I say, I woke up in the last crash, that I realized that take everything off, take all the stuff off. It's a waste of time. That's not going to save you when this happens, because that's when you're scared. I've been through a couple, but that's when you see it. When you see it is like, hang on, the lines can't save you when this happens. You're going to take a step back and say, what can save me when this happens, when the world changes? What can save me? The only thing that can save you is having a proper risk management strategy and having a proper strategy. And we've talked about that a lot today, the difference between a system and a strategy. So Shepard says you lost your money in coal. I'll tell you what, Shepard, the trouble with mining is, unless you own the mine, of course, but if you're investing in it and you're investing in commodities and that sort of thing, the problem I find with investing in commodities is commodities are cyclical. What I call cyclical is they go up and they go down, they go up and they go down. A good example is there was a time when I was invested in Anglo American, and I think I paid 180 Rand for the share, not dollars, Rand. It went down to like 60 Rand. I was looking at that and thinking, this is not good. Do you know that it went back up to 600 Rand? That's the problem with commodities. They're so cyclical. You never really know where they're going to be. Luckily for me, that was another investment that I had that effectively I don't sell them. So I was just like, should I, shouldn't I? And then I was like, shouldn't I? Just leave it. And that was in, I think, 2011 or something like that, 2012, I remember that. But then I'd already learned my lesson, and I already had my management, risk management in place. Ruben, I will trade anything, even orange peels. I'll trade it if there's a market. But I prefer only to trade Bitcoin. I don't buy tokens or anything like that. And I'm not a big fan of crypto. As Bruman knows, I won't invest in it. Let's put it that way. I feel like I'm at the end of the pyramid. I'm like at the end of the road. If I'd invested in it, I should have done it when it was $1,000, not now. But okay, it's at $100,000. It could go to 200,000. I don't know. Is it the future? I don't know. There's a lot of things. There's a lot of arguments about it. What are governments going to do about it? Are they going to take it over, or challenge it? Or because governments are moving into digital currency, they're not going to have paper money anymore. And then what's going to happen to Bitcoin? And there's a lot of question marks surrounding these issues, and my problem with crypto is that it's built on fresh air, as far as I can see. But I will trade it. But I just don't trade it very often. I don't concentrate on it much. You guys will have noticed I concentrate on Forex, indexes, commodities mostly. And do you know why? It's because I grew up with that. I mean, I've been doing this for a long time, and it's difficult to get away from things that you know. I grew up with indexes, Forex, shares, things like that. Crypto is a new thing, and I'm an older guy, so same thing. You trade it the same way, guys. Don't think you're going to trade it a different way. It's going to have the same patterns. It's going to do the same thing. My problem with crypto, as old as I am in the markets, is I don't understand the fundamentals enough, or as clearly as I should, with if I'm trading crypto. So if something happens in the markets, like indexes, currencies, things like that, and somebody says something, it clicks in my brain as to what might happen. Whereas with crypto, it doesn't quite compute, like which way is it going to go if you said that or whatever. So that's why I don't really concentrate on it that much. But I have traded a couple of times on Bitcoin and stuff like that, in and out. But not permanent. Not permanent. Bruman's fart coin. I love it. That just says to me, whoa. Even like, is it Elon's Dogecoin? Who does Dogecoin? Is it Elon, eh? The name Dodge, I mean, it's a bit Dodge, don't you think? Yeah, that's not something that I look at and think, well, this is a good idea. Yeah, Blue Manga, yeah. So I see you say you thought the crypto was done until someone convinced me that blockchain is the value behind it. They've tried to convince me hundreds of times that blockchain, how it works, and all the rest of it. Do you know that even Jordan Belfort, the Wolf of Wall Street, you all know him, I'm sure. Okay, and if you're an avid trader, you would have watched the movie. You'd be interested in the whole story. Even he says that crypto is built on fresh air and it's the biggest scam ever made in the world. And he was the biggest scammer ever. So well, maybe not, but yeah, okay, he was quite a big one. And even he says, beware, watch out. The other problem I have with it is Jamie Dimon, the CEO of, is it Goldman Sachs or Morgan Stanley or Goldman Sachs. But anyway, he turned around and said, we've got an exchange traded fund for Bitcoin, but it's dangerous, it's high risk, and it's not built on anything, and he doesn't believe that it's got any value. And he's the CEO of one of these places, and then BlackRock said the same thing. So, if people like that are saying it, then I am not convinced. And then this blockchain thing is built on a whole lot of BS as far as I'm concerned. So no, it's fresh air. It's definitely fresh air, but it is too big to fail. So we are in a situation. Thanks, Morgan Stanley. Thanks, Ruben. get confused between them. But we are in a situation where we can't let Bitcoin fail because there's too much money in it. So now all these big companies, all these big places have now invested in it and believe in it. So you can't let it drop off the sky. So now the investment is becoming safer based on the fact that the people that are holding it up really need to hold it up. That said, it could still go pear-shaped. Yeah, no, like I said, I'll trade anything if a market is made, but investments, I look at something very important to me in investments is asset value. I need some kind of asset value. I need someone to say to me that there's something behind it. And there's no asset value for crypto. It's just an exchange. So it's you trading against me. The value of crypto is determined by people, by traders, by I decide that it's worth that, so that's what I'm paying for it. That's kind of how its value is worked out. There's no real asset value to it. It's not really based on any economy or anything like that. It's really the value is based on two people trading in a market. Also, it's not something that you can hold, not something you can grasp. Like Marco says, built on energy, but what can you do with that energy? Can you hold that energy? Can you do anything with it? Can that energy do anything? Is it or is it just BS? What can you do with that energy? Mr. Wonderful says crypto is all about the technology, not the coins. What technology? What has it invented? What has it done? It's nothing. Don't tell me anything about internet and computers because that was there long before crypto. Okay, so they don't own the internet. Definitely not. Nobody even knows who owns Bitcoin. So no. What did technology do? They haven't. The coins of your own technology. What technology? Yeah, and BlackRock have given the same warning, Kokoro. You say BlackRock invested $5 billion in Bitcoin. You must remember that investment is effectively an exchange-traded fund that they put out that you can buy like, yeah. Okay, that's effectively what they put out. And with it, just like Jamie Dimon from Morgan Stanley, they put out a warning that it is not an asset-based product and it's high risk and it doesn't hold any real value. So they both said that it's dangerous. Okay, so coming from them. Okay. So like Ruben says, we're traders, let's trade Fartcoin. And we can trade anything. We can trade Dogecoin, Fartcoin, any of them. We're traders. If they put a market together on orange pills, we'll trade it because it's there. Okay. That's what I say. I just, for example, from my personal perspective, don't want to invest in it because I just feel like, you know, who gets caught out with all these things? It's always the person who gets in last. And I just feel like if I invested in it now as an investment, I'd be the one getting in last. You know, you want to get in it. If you got in it in the beginning, then that's great. You've done well. But in the beginning, I also didn't believe in it, and I still hold the same beliefs now. So I'll trade it. I'll trade it for a couple of days here and there, in and out, just like anything else. And you know, I understand that there's a risk that goes with it, and I play around on that level. That's it. I love trading it. Crypto traders are Reddit traders. Crypto traders are Reddit traders. Rob, you sound too logical about BTC. The people who own Bitcoin don't like logic. The fixed trader, yeah. Some of them do. Bruman likes my logic, don't you? Hey? Ruman's a full-on crypto trader. He loves it. And, yeah, I don't hold anything against anyone for what they do, but yeah. I think the idea of BTC was to supply wallets to people that couldn't have any type of account. I don't know what the idea behind it was from the start, Marco, or I think it was to get away from governments taxing us and that sort of thing, and now they're getting involved in that as well. Now they're trying to find a way to tax us on our crypto. So, and for Oak who doesn't believe in crypto, I've actually got some crypto, so it's ridiculous, isn't it? But now they're trying to, like, if you try and move the money to the bank or whatever, now they want to nail it or whatever. It was to try and take the currency away from the governments, and it hasn't really worked out. And another big problem I've got with it is there is somewhere recently they said they've become very crypto friendly, where you can go and buy stuff with it. But in most places where you go, you can't buy anything with crypto. It's annoying. Women setting up a rug pool. Lol. Oh no, I'm just joking, but I know, yes. BTC would still be cheap if it could go to $1 million, as they wouldn't it? BTC would still be cheap if it would go to $1 million, as they say, wouldn't it? BTC is at 100,000. I'm still waiting to see if it'll get to 200,000. Probably will. But, you know, people have strange calls. Don't listen to people when they say, oh, it's going to $1 million. Yeah, I've heard better things. It might not. There's the market. Are you asking me how's my BTC trade? I don't have a BTC trade at the moment. Sorry, but I thought you were asking someone else. No, I don't have a BTC trade at the moment. Not at the moment. If you want to see BTC, yeah, put it up. BTC. Boom. Yeah. There you go. No trade at the moment. So I've had a couple of trades here and there, but I haven't got one at the moment. And at the moment it's long. I haven't even looked at it for a day or so. But at the moment it's bullish. Going to the upside. And looks like it wants to continue going up there, but I would be careful, guys, on BTC around these levels. Look at that. It looks to be pretty much an area that it doesn't like to break through. 110. See if it breaks through that. Seems to be sitting in a bit of a range at the moment. Seems to have found a range somewhere around here. Seems to be stuck in there for a while. I noticed that the other day, that it was sitting in a bit of a range. Hasn't really gone anywhere. I was just waiting for it to get back to 100, and then I never bought it. I should have bought it at 100, but I wasn't going. I never got around to it. Last time I wanted to buy it at 70, but I got a feeling it's actually gonna crumble a bit, maybe go down later on, and then we can buy it again. But yeah, not a lot going on BTC. But I don't have a trade at the moment, so I'm not too concerned about it. Oh yes, cash start. Gone. Rumen, I was bearish on Ethereum in 2022. I was hoping it will tank. I was in the same trade, made good money. I only like BTC. Could be. I hope so. Boom. Okay, right. So yeah, I should have actually swung BTC, but I didn't swing trade it. Should have gone long, but I didn't. Why didn't I? It's probably because I'm not a big crypto trader. Probably thought it was going to go to zero here. But I got out. Fine. quick trades. Like I say, BTC for me is very quick trades. Like the US 500, I'll hold it and hold it and hold it because I've got a point of view on it. I've got an underlying point of view on the US 500 because it's part of my family almost. I've been trading this for so many years. So for me, the US 500, I've got my point of view. I've got my point of view that it's going to go up to 6,600, probably 7,000. I know where it's going. I feel it. Crypto, I got no real feeling. So I'll trade it in and out and I'm gone. It's like somebody said to me earlier, should I only trade on one instrument? And I've said trade all of them. But when I say that, obviously I've got the ones that I'm really comfortable with, and then I've got the ones that I'm sort of uncomfortable with, like the cryptos and that I'll take the trade and then I'll get out quickly because I don't know what's going to happen next. Shortened. Yes, it did. I remember the US dollar Japanese yen trades worked out quite well. There's quite a few trades working out quite well. These two are working out quite well now as well, US 500 and Brent. And I got both of these on my cash account as well, so I'm happy with both of them as well. Those are going quite well. No, it really doesn't, Bruman, like you say, it doesn't matter what we like or what we trade. It really doesn't matter. As long as it's a market to trade, it's great. You can make money off of it. And what I simply do is look for trades that look like a trade. If it looks like it's a trade, I'll take it. I don't care what it is. If it looks like it's a trade, if the chart looks like it wants to work, and then I'll take it. Trade. Exactly. As Bruman says, learn the trade and you can trade absolutely anything. All bloggers are promoting the 7i exit. Yeah. Keep it simple. Don't get complicated, Ja. Thanks, Bruman. Totally. Keep it simple. Guys, I've been here for a couple of hours now, so I think I should probably, in all likelihood, hit the road before my throat burns out, chatting to you guys. So it's been great. I've loved chatting to you guys again. Please do come back on Thursday for the live show. I'll keep it at 1400 GMT plus 2 for now, and then we'll look at how that goes. But yeah, and don't forget, that's when the live draw occurs and all that, and we'll take it from there. But guys, thanks for watching. It's been good having you on board again, and I'll chat to you guys later. Don't forget to watch the other video. I've got a video coming out for you guys tomorrow about break-in retest trading, and then don't worry, Friday will have something as well. I know we didn't bring something out yesterday, but yeah, been busy, man, been busy. Sometimes, but I'll always make sure there's something there for you. So thanks, ciao, and guys, keep your feet on the ground, reach for the sky.